Renovating a property can be exciting, but it can also have very different tax outcomes depending on how you go about it. At Elite Tax Success, we help you understand the tax obligations and entitlements that apply whether you're a personal property investor, carrying out a profit-making activity of property renovations, running a business of renovating properties. In this video, we'll explain the differences and how they impact your tax position. Personal property investor. If you're considered a personal property investor, your net gain or loss from a renovation is treated as a capital gain or capital loss. A capital gain or loss is sale proceeds, purchase price, plus buying, renovating, and selling costs. You may be eligible for capital gains tax, CGT concessions, like the CGT discount or main residence exemption, which could reduce your tax bill. For GST purposes, you're not conducting an enterprise, so you don't need to register for GST. If you're registered for GST for another reason, you can't claim GST credits on related purchases, and you won't charge GST on the sale. Profit-making activity of property renovations, also known as property flipping. If this applies to you, report net profit or loss in your income tax return, entitled to an Australian business number, ABN. May need to register for GST if renovations are substantial. Registering for GST. Key points. You generally don't need to register if your transactions are private, e.g., building or selling your own family home. You only receive residential rent. You may need to register for GST if turnover from property and other taxable activities exceeds the GST threshold. Your activities are considered an enterprise, such as buying land to develop and resell for profit, even a one-off project. Business of renovating properties. If you're running a business of property renovations or flipping, properties are trading stock, even if you live in them briefly. Purchase and renovation costs become part of trading stock until sold. Annual profit or loss is calculated like any other trading stock business. You're entitled to an ABN. You may need to register for GST if renovations are substantial. Important. CGT does not apply to assets held as trading stock. CGT concessions, such as the CGT discount, small business concessions, and main residence exemption, don't apply to income from selling these properties. Understanding your correct tax position can help you plan more effectively, avoid costly surprises, maximize your entitlements. Whether you're renovating a single property or running a full-scale property business, knowing where you stand for tax purposes is essential. At Elite Tax Success, we can help you determine your category and make sure you meet all your tax and GST obligations. Let's talk property tax and turn your renovation into a financial success.
https://successwa.com 8937055515. Tax at successwa.com.
Elite Tax Success. Where success isn't luck, it's strategy.